This is the review for exam 5, and I'm going to go over quite a few of the different examples for you. I have a new document camera, so you won't see my face because I can't figure out how to do both at one time at this point. So, but I wanted to try it out to give you the exact look at the problems that we did instead of showing them to the camera, and so hiding my face and you can't hear my voice and that kind of stuff. So for exam 5, this covers chapters 10 and 11. It is 100 points like the other 4 have been. You will have 2 hours to complete the exam. There are quite a few forms like with exam 4 for you to complete and upload. So again, make sure you have those pulled up from the email that I sent, and that you either have them printed or ready to type in, and then when you're finished, again, upload those to the problems that they go with. You can have the formulas on a sticky note or a 3x5 card for the ratios for this exam as well. But again, no notes, no demos, no problems, no help from somebody else not taking your test for you. Don't use the internet, just like we've done before. Make sure you have a calculator available because of the fact that there are going to be quite a few items that you are going to have to use your calculator for this test. So what you can see in front of you is what's going to be on the test. This is also in Canvas as well. And I'll go over each one of these as we go through, and I'll show examples. So you're going to calculate straight line depreciation and journalize the entry for that. You're going to calculate your units of production depreciation and journalize an entry for that. You're going to calculate the acquisition cost of assets, which is that bundle purchase, and then journalize the purchase of that bundle. You're going to calculate depreciation expense for an asset. You're going to journalize the entry to amortize a patent. You're going to calculate your times interest earn ratio, journalize salaries expense, and then journalize the employer payroll tax. Those both go together. You're going to record warranty expense and the cost of the warranty work. You're going to calculate the asset turnover, and then you're going to compute depreciation for a machine under the straight line and units of production depreciation methods. And this will look like problem 10-2A, which I will show you that as we get to that problem. Okay, so with that, the first thing that I want to do is to show you problem or exercise 10-4 and 10-5. This is calculating out the straight line and units of production for an asset. So the asset was purchased at $43,500 with a salvage value of $5,000. It's expected to have a useful life of 10 years, so each year that the company owns this asset, the depreciation is $3,850. Now, that's what you're going to do for the first part of the items on the review. So that's this one. Now, the calculation of the units of production, these two are going to go together. So what you'll do to journalize this is you'll put depreciation expense and then accumulated depreciation, and then in this case it'd be $3,850. Remember, straight line is the same each year that you own that asset. With your units of production, you start out the same way. You take the cost minus the salvage value, but instead of dividing it by how many years that we own, that the useful life is for the asset, we divide it by how many units that we think could be produced. So 385,000 units is expected to be produced from this machinery. Once you divide that out, that depreciable cost is 10 cents per unit. Now in the second year, this machine produced 32,500 units. So what you do is you take those units times the depreciable rate of 10 cents per unit, and you get $3,250. So for year 2, the depreciation is $3,250. You would debit depreciation expense and credit accumulated depreciation, again $3,250. So that's going to, again, satisfy the first 2 items that are on the review: calculating your straight line and journalizing the entry, calculating your units of production, and journalizing the entry. So those are the first part of the test. Okay, then the bundle purchase. I'm going to look at problem 10.1a here. Now, with this, I'm going to give you the assets and the estimated market value, and then you'll have an area for the percent of the total and the apportioned cost. So you'll need to calculate those out. So with each of the items that I give you for the test, again, I will give you the estimated market value or the appraised value and the total of what the appraisal is. The apportioned cost, I'll give you the total of what the bundle was purchased for, which in this case it was $900,000. So to calculate the percent of the total, you're going to take the estimated market value or appraised value and divide it by the total of the appraisal. So you would take 508,800 and divide that by 960,123. Oops, my calculator's not on here. So again, 508,800 divided by 960,000, and that gives you 53%. So you take the estimated market value divided by the total of the appraisal, 960,000. That's going to give you 53%. Land divided by the total gives you 31%. The improvements divided by the total gives you 3%. And then the vehicles divided by the total gives you 13%. Make sure you add up the percent of the total. It needs to equal 100%, and you will show me that on the test. Now, again, when you go to calculate out the apportioned cost, you're not using the total of the appraisal. You're using how much you paid for that asset. So you're going to take 900,000 times 0.53, and that's going to give you 477,000. So that gives you how much out of that bundle that the building was. So 53% of the cost of the bundle purchase is the building, 477,000. Then you'll take 900,000 times 31%. You get 279,000. 900,000 times 3% or 0.03, 27,000. 900,000 times 13% or 0.13 gives you 117,000. Double check and add this all back up. Make sure it equals the cost, in this case 900,000. So your table or your area should look just like this when you get done with the first part of that problem. Then you're going to journalize in the general journal, or I'll give you a journal. You're going to journalize the purchase. So you list your assets. It could be 3, it could be 4. It just depends on how many are on the test. You write down the amounts that are the apportioned cost here, and then your cash will be your credit. So your debits are your assets, and then your cash is going to be your total, which is, in this case, 900,000. So that's what you're going to do for the part where you will have on the test where it says to calculate the acquisition cost of an asset. All right, depletion of an asset. So depletion means that we can't replace it. We can't grow more oil. We can't grow more ore. We can't grow more diamonds. We can grow more timber, but it does take a very long time. So that's why we use depletion. So for this asset, this is an ore mine. This is an example. You're not going to have to journalize the cost. That part's not there. You're just going to journalize the depletion amount here. So you're going to take the cost minus the salvage value. You're going to divide by the number of tons that are able to be gotten out of, in this case, an ore mine. The depreciable amount or rate is $1.60 per ton. Now, in this case, 180,000 tons were mined during the year. So you take that and multiply it by your depreciable rate of $1.60 per ton, and you get 288,000. For our natural resources, we use depletion expense and accumulated depletion. And again, this would be 288,000 debit the expense and credit the accumulated depletion. All right, then the next one, you're going to write up an entry to amortize a patent. The example that you did for homework, or the problem that you did for homework, was a copyright. So it works exactly the same. It's just that this was a copyright instead of the patent like you're going to have for the test. So bear with me a second. I gotta find that. There it is. Okay, so this is exercise 10-21. Again, you're not going to record the purchase. You're just going to record the amortization. So you take the purchase divided by its useful life, which in this case it was 10 years. And so the amount per year is $41,800. You use amortization expense and accumulated amortization for your journal entry. And again, taking the cost divided by its useful life, you get $41,800. So that's going to be the part of the test where you amortize a patent. All right, payroll. I hope all of you learned a lot about payroll, that your employer has things that they have to pay above and beyond your pay per hour or your salary. And so, a lot goes into that. And your employer does not have to help pay for insurance. Your employer does not have to, give you money for towards your 401k or any pension plan or anything like that. So if you are fortunate enough to have those at your work, that's one thing that your employer does not have to do, but they do choose to do that. Now, with this part of the test, you are not going to have to memorize all the percents for the taxes. They will be given to you on the test. So the biggest part here is memorizing or remembering the titles for the entries. So in this case, this is exercise 11.8, which stems off of exercise 11.7. And this is for the employee that was listed in letter A. Okay, so this is for so this was the first employee up here in letter A. All right, so the first title is salary expense, and then you have your Social Security tax payable, Medicare tax payable, your federal income tax payable, and in this case, salaries payable. Again, you could have insurance, health insurance, premiums payable. You could have union dues. There's a lot of things that could, come out of the paycheck. But remember, in Michigan, we don't have, we have sales tax. Michigan has sales tax at 4.25%. But I'm sure you noticed that a lot of your problems didn't even include the income tax at 4.25%. So you have to have at least the 3 taxes. All right, so what you do here is you take your salary expense, which is what all of your employees got paid, all added together. Your Social Security is 6.2%, so you'll multiply 800 times 0.062. That's $49.60. Remember your rounding rules. Medicare is $800, again, salary expense, times 0.0145 or 1.45%. That's $11.60. They gave you the federal tax, and I will give you the federal tax on the test as well. And that was $80. To get net pay, or the salaries payable, you take the gross or the total payroll minus the taxes, and that in this case was $658.80. Remember that all these payables, the amounts that are journalized and posted, sit in those ledgers until it's time to pay those to the appropriate government agency. All right, for the employer, above and beyond what they pay you to work, for the employer, they have to match your Social Security and Medicare dollar for dollar, cent for cent. So you'll notice that the Social and Med are both exactly the same. For the federal and state unemployment, for the test, nobody has made more than $7,000, so you will have unemployment for federal and state on the test. Now the percent is going to possibly be the same as your problems. It could be a little bit different. So in this case for the federal, it was 0.6% or 0.006. So you take 800 times 0.006, And then the state unemployment was 5.4% in this problem. So you take 800 times 0.054 and you get $32.40. Again, the social and the med, dollar for dollar, cent for cent. You add up these four, and that's going to be your payroll tax expense. So payroll tax expense is what the employer has to pay above and beyond. Again, this could also have health insurance. It could have pension or 401k match. It just depends on what the problem reads on the test. So this is an example of what it will look like. Again, I'm not worried about the math part. I think all of you can do the math. It's just remembering the titles. But again, all of the percents will be given to you on the test. So again, on the review here, this covers the salary expense and the employer's payroll tax. All right, for the warranty. Remember that companies usually give a warranty for some of the items that they sell. Maybe it's a year, maybe it's 90 days, maybe it's 60 days. It just depends. So the first thing that you're going to do is you're going to take the amount of the sales and then the percent that they think will become warranty work. This is just like what we did before with the allowance for doubtful accounts, what we think would be bad debt. So based on past practices, this company thinks that 4% of their $6,000 for a copier will have $240 of warranty expense. So we set that money aside just in case. So again, you just multiply the percent given times the amount, and that will give you what the warranty expense will be. So for that, you journalize that with warranty expense and estimated warranty liability. So we set the money aside in the liability account, and then if we do have to fix the copier, then we can take it out of there. Now, for this problem here, for problem or exercise 11-12, there was $209 worth of warranty work. And so you take the $209 out of your estimated warranty liability that you set aside, that's your debit, and then we're going to go to the parts room, get the parts that we need for the copier to fix it, and then that comes out of our parts inventory as a credit of $209. When we bought the parts, it was cash credit and inventory debit, and then when we go to use the parts, it's going to be a credit to inventory at $209. So in exercise 11-12, I would worry about step 1, calculating how much the warranty expense is expected to be, and then part B and C of that problem. You don't have to worry about recording the sale of the copier, just what you think is going to end up being warranty expense, and then having to fix that copier. Okay? All right. Then let me go over the last part here where you're going to compute depreciation for the machine, and then we'll go over the two ratios. So for problem 10-2A, hopefully you did practice this. You can do problem 10-2B if you want to for extra practice. We're not doing double declining balance. Remember, we did not learn that in this chapter, so you only have to worry about straight line and units of production. Now what I'm going to do is I'm going to give you in your forms a worksheet like this, and then I'm going to give you a work area like this down below. You do not have to use the work area down here, but if you do, make sure your final answers for your units of production get up here into the table, because you'll put your straight line up here, and then if you use the work area down here, then you need to put those numbers up at the top. So the cost of this machine was $257,500. Its salvage value is estimated at $20,000. So the depreciable cost is $237,500. The useful life is 4 years, and so each year the depreciation for the 4 years is $59,375. Remember that each year it's the same each year, year 1, year 2, year 3, year 4. You add this up, and that needs to equal your depreciable cost that you got from the cost minus the salvage value. Now for the units of production, again I'm going to give you the table here, not these two columns here, but I'll give you this table at blank here. You're going to take the cost or the depreciable cost, sorry, and you're going to divide it by how many units that this machine is supposed to produce during its lifetime. Now that ends up being 50 cents for the depreciable rate, so 50 cents per unit. So that would go in your unit cost here. As you're going through, you will be given the number of units, so you multiply the units times the cost, and that will give you the depreciation for each year. Now, if you remember as you went through the homework, year 4, you could not take the full amount, 7,600, because if you take 15,200 times 50 cents, 0.50, that's 7,600. If you add these all together, you're going to go above the depreciable cost, and we can't do that according to our rules of accounting. It has to equal the depreciable cost. So, with that being said, you can only use 4,300 to get you to the depreciable cost. So year 4, we can only use depreciation of 4,300. So if you add up 110, 62,300, 60,900, and if you put again 7,600 here, it's going to take you over. So what you're going to do is you can either add up the 3 and subtract it from 237.5, or you can add up all 4 with the 7,600 here, subtract the 237.5, and that will give you the 4,300. Either way, it does work out. But again, we cannot use all of the depreciation. We can only use enough to take it to the depreciable cost. So we can't go lower than, again, the depreciable cost. You'll put these numbers up here in the table for the test final answers, and again, make sure you add up both columns, okay? And again, you'll have that area to work with, no double declining balance at all. Again, practice with 10-2B if you want to, or again, just refer back to this, and it will, for calculating out to see if you need any extra help with that one. All right, the last 2 items are our times interest earn ratio and our asset turnover. So I'll start with the times interest earn ratio. This is exercise 1119. Now, if we go to the book and we look at page 404, this is what the formula looks like. It's income before interest expense and income taxes divided by your interest expense. So that's our formula. Income before interest expense and income taxes divided by interest expense. So for exercise 1119, here's your income before interest and expense. Here's your interest expense. You divide those and you get your ratio. Now, the higher the ratio, the better the company is doing at covering the amount of interest. So for letter or company D, they can cover the interest on their debt 27 times, so that's really good. Everybody can cover it at least once, and that's what you want to look at, but they can obviously cover it quite well. So that's what you would look at here. So again, income before interest expense and income taxes divided by interest expense. Page 404 in your textbook. All right, and then the last ratio is the asset turnover, and this is on page 373 in your book. It's net sales divided by your average total assets. And with this one from chapter 10, this is exercise 10-24. So again, you're taking your net sales and you're dividing it by your average total assets. So this is year 1 and year 2, add it together, divide it by 2, and in this case you get 3.36. Year 3 net sales, this is year 2 and year 3 assets, add them up, divide it by 2, and you get 4.5. Now, they increased the asset turnover, which is good. And so they're more efficient at using their assets, which is very good. But if they were comparing that to their competitor, in this problem they said to compare it to the competitors at 3, they're doing very good with both of those years. So again, you'll do that on the test. And please don't forget to make the comments. I noticed on the last test, a lot of comments weren't made with the ratio, so do make sure that you make those comments as to how they're doing from year to year or with their competitors on that. All right, so that's everything that's going to be on the test. Again, it is going to take a little bit longer because there's extra forms this time to upload, and so you do get 2 hours for the test. This is the last exam. You made it. You know, you should be proud of yourselves for making it this far, and you know, getting through the class. And just again on this test, just make sure you do have your calculator because you are going to need your calculator. If you have questions, please email.